So I think, first of all, we have to distinguish between public debt and corporate and household debt. I think if we look at household debt, the past decade has been a decade of balance sheet repair for many households. So on the household side, the pandemic and what came before is not going to pose major risk going forward. It's the corporate side and the public debt side where most of the concerns are concentrated. If we look at the corporate debt side, it's true that some countries, France being one of them, but the US as well, have had substantial increases in corporate leverage in the past decade. If we look at recent research, however, it would suggest that corporate debt booms tend to leave few traces on the economy. The reason is quite simple. The reason is that we have institutions like bankruptcy laws and debt reorganization that make it relatively easy, at least easy compared to household debt, to deal with an overhang of corporate debt. And I think it will be important that we let these mechanisms also work, that if we find that companies are over indebted, we should restructure them, reorganize the debt, and move on. The main risk here is really that we continue to subsidize business models that have no future, and the experience of Japan in the 1990s tells us that this can be a very costly way to deal with this. But I think both in terms of the banking system and in terms of the institutions that we have to deal with corporate debt, we are in a reasonably good situation. So this leaves public debt. And public debt has risen in many countries. It was already high before the pandemic, and with the support during the COVID month, it has risen quite substantially in many countries again. And there is an argument, and I think that is an argument that we should take seriously, that there might be another crisis, and we want to be prepared for another crisis in the sense that we still have the possibilities that we had this time to react and to support households. So if we enter the crisis with a debt level that's too high, we might have problems to do that, and we might not be able to do that to the same degree. At the same time, we've also learned in the past decade that after a crisis, it's important to get back on a growth path before we consolidate and before we switch into a more restrained fiscal environment. So I think there's a strong case to maintain for the foreseeable future a very supportive fiscal stance. We're in a lucky situation that interest rates are very low and that the interest burden on public debt is very low. So there's a good idea to extend the maturities and have very long borrowing so that we don't have to repay the debt or roll it over in a short period, but then in the medium run to come back to a form of consolidation that allows us to tackle all the other important challenges that we have, like climate change and the green transition and digitalization, all of which also necessitate substantial public expenditures.